Keon Corniff, also known as Mr. Finance, your favorite financial educator and business coach. And guess what? Today, I'm going to help you to understand how the banks really work. So today, I'm going to talk about the banks and the relationship with them and the insurance companies. So here's the thing. When you deposit your money in the bank, the relationship that you now have with the bank is called fractional reserve banking, which is pretty much a terminology that they use to let you know that, hey, I'm going to take 90% of your money and I'm going to loan it out and earn interest on it for my own benefits, or I'm going to invest it with an insurance company and then we're going to create a tax-free revenue from it. Now, they're only obligated to hold 10% of our money in the books. That's the reason why you can't just walk up in the bank and say, hey, I need my $100,000 today. You got to order it. Now, the thing about it is that the banks also give you what's known as simple interest, not compounded interest. And let me tell you how the banks now turn our money into wealth. The banks then take our deposit and put it with the insurance company, which is known as infinite banking. Now, this is where the banks turn our simple interest money that they're giving us and make themselves in a position where they get compounded interest. And this is where they use something called BOLI, B-O-L-I, which stands for bank-owned life insurance. This is where the insurance companies and the banks create a very beautiful relationship where they get the growth, the safety, the protection, and tax advantages. And that is how the banks create tax-free money and grow their money at a very significant rate using compounded interest. This is why they're able to use this and offset like employee benefits and a lot of tax-free incentives for the banks and grow their asset portfolio. You want to know more about that? Go to usbanklocations.com. Click on the top left corner where it says bank ranked, and then slide all the way down and click on life insurance assets. This is where you're going to learn who's the top 5 banks that use life insurance to grow their asset portfolios. Now, when the banks create this relationship with the insurance companies known as infinite banking, now the banks will now cover each of their depositors for $250,000. That's the relationship that the insurance play. So now the insurance insure all the depositors and every deposit that you put in there for $250,000, and this now make the banks and the insurance company have a relationship. But let's think about your money now. What if you had $1 million in the bank and the bank was to go belly up? Did you know that you're only insured for $250,000, which means that you have $750,000 of exposure? And that's the reason why now they're able to take 90% of that and make a whole lot of money out of it. So what we do, we teach families how to create their own banks. Cut out the middleman. The bank is a middleman. That's how they are. So we show you how you can work directly with the insurance companies so that way you can get the growth. You can get the safety, you can get the protection, and you can get the tax-free or tax advantages that you can receive on your money. So if you like to learn where to put your money, where you can get the growth, the safety, the protection, and tax advantages, let me show you how to do this and be your own bank so you can win the money game. Guys, it's important for you to learn these fundamentals because one, you don't need the bank when you are the bank. Let me show you how to do that. If you'd like to learn more, comment the word "be your own bank" or text 973-873-5977 and text the word "I am ready" and your full name. I see you at the top.